Hi guys, welcome to this video series on accounting for IGCSE students. After the day-to-day transactions are recorded in the journal, the next step is to classify all transactions relating to a particular head at one place by preparing accounts. An account is a record of transactions relating to a particular head at one place. Hence, transactions affecting a particular account are classified and recorded in that particular account. Separate accounts are maintained for each asset, liability, income, or expense of the business, and additionally, the business will also maintain a capital account and a drawings account. You must have also heard about the term ledger. Students do get confused between the term ledger and account. Ledger is a record of all the accounts maintained by the business. In other words, ledger is a place or a register where all the business accounts are maintained. Hence, accounts are maintained within the ledger and various transactions are recorded within each account. In one of the previous videos, we've already seen the format of an account. So this is the center or the dividing line of an account. To the left, we have the debit side, and to the right is the credit side of the account. So in a journal entry, when an account is debited, the entry will be posted to the debit side of the account. And when an account is credited in the entry, it will be posted to the credit side of this account. So let us start making ledger accounts for the journal entries recorded in the previous video. So we will now classify all these transactions into various accounts and see how accounts are prepared. So the first transaction is Andy introduced cash into the business. Cash is debited and capital is credited. Let us open a cash account. Since cash is debited, go to the debit side of cash account. Write on the date, Jan 1. Details column, you will write the account that is credited. So capital is credited here, so we'll write capital in the details column and 100,000 in the amount column. The posting is not yet complete. We need to still give the second effect. So second effect will be in capital account. Let us make a capital account. Go to the credit side of capital account, write on the date Jan 1. Details will be the account that is debited, which is cash account, and 100,000 in the amount column. This completes the posting of the first transaction. Next transaction, furniture is debited and cash is credited. Let us make a furniture account. Go to the debit side of furniture account. Record the date, Jan 2. And details will be the account that was credited, which is cash, 8,000 in the amount column. Second effect will be given in the credit side of cash account. Write on the date, Jan 2. And details will be the account that is debited, furniture, 8,000 in the amount column. Next transaction, cash is deposited into bank. Bank is debited and cash is credited. Let's make a bank account. Go to the debit side of bank account, record the date. Details will be the account that is credited, cash, and 20,000 in the amount column. Second effect will be given in the cash account credit side, Jan 5, date column. Details will be the account that was debited, bank, and 20,000 in the amount column. Salary was debited and rent was debited by 4,000 and 6,000. Cash is credited by 10,000. So to make 3 entries in the accounts for this transaction, let's make a salary account. On the debit side of salary account, record the date, Jan 6. Details will be the account that is credited and 4,000 in the amount column because salary is debited by 4,000. Same way, make a rent account. On the debit side of rent account, post the entry. Details will be cash and 6,000 will be recorded in the amount column. Second effect of this transaction will be recorded in the cash account credit side. Date Jan 6, salary 4,000 and rent 6,000. So total of 10,000 credited in the cash account. You can try posting the other transactions on your own and then later check with this video so as to make sure that you know how to prepare accounts. Drawings debit and bank credit. Let's make a drawings account. Go to the debit side of drawings account, Jan 10. Details will be the account that is credited, bank, and 5,000 in the amount column. Second effect will be given in the bank account credit side. Jan 10. Details will be the account that was debited drawings and 5,000 in the amount column. Next transaction, purchase is debited and cash is credited. Let us first record the credit effect of this transaction. Go to the credit side of cash account. Date Jan 12. Details will be the account that is debited purchase and 3,000 in the amount column. Purchase was debited. So let us make a purchase account. Go to the debit side of purchase account. Record the date. Details will be the account that is credited, hence cash here, and 3,000 in the amount column. Next, goods were purchased on credit from toy store. Purchase is debited. Go to the purchase account debit side, Jan 13. Details will be toy store and 5,000 in the amount column. Second effect will be in the toy store account. So let's make a toy store account. Go to the credit side of this account. Date would be Jan 13. Details will be the account that was debited, which is purchase account, and 5,000 in the amount column. Next transaction, goods were sold for cash. Cash was debited and sales was credited. Go to the debit side of cash account. Record the date. Details will be sales account and 2,500 in the amount column. We do not have a sales account, so let us make a sales account. Go to the credit side of sales account. Jan 18. Details will be the account that was debited, which is cash, and 2,500 in the amount column. Next, Mr. X is debited and sales is credited. Let us open a Mr. X account. Go to the debit side of Mr. X, date Jan 20, and details will be the account that is credited, sales account, and 1,000 in the amount column. Second effect in the sales account, go to the credit side of sales account, write down the date of the transaction, and details will be Mr. X, amount will be 1,000 again. Then goods were returned back by Mr. X. So sales returns is debited and Mr. X is credited. Let us open a sales returns account. Go to the debit side of sales returns account, Jan 23. Details will be Mr. X, 250 in the amount column. Second effect in the Mr. X column credit side, write down the date Jan 23. Details will be account that is debited, sales returns account, and 250 in the amount column. Goods purchased were returned back to toy store, so toy store debit and purchase returns credit. Go to the debit side of toy store account. Jan 24. Details will be purchase returns and 200 will be recorded in the amount column. We do not have a purchase returns account, so let us make a purchase returns account. Go to the credit side of purchase returns. Record the date Jan 24 and details will be account that is debited, which is toy store, and 200 in the amount column. Next, bank debit, Mr. X credit. Go to the debit side of bank account. Jan 28. Details will be Mr. X and 750 in the amount column. Second effect will be recorded in Mr. X account credit side. Jan 28. Details will be bank account and 750 in the amount column. Last transaction, toy store debit, bank credit. Check was paid to toy store. So go to the toy store account debit side. Record the date of transaction Jan 29. Details will be the account that is credited, bank, and 1,500 in the amount column. Go to the bank account credit side. Jan 29. Details will be toy store and 1,500 in the amount column. If you think that the video is useful, please like the video and share it with others. Kindly subscribe to my YouTube channel to receive notifications when more videos will be uploaded. If you have any feedback regarding the video or you have any doubt regarding this topic, please comment below the video or you may WhatsApp me or email me on the details mentioned.